Hey guys, thanks for tuning in. Before we get started in today's video, don't forget to join our free Facebook community, get real answers to real credit questions, learn from some of the experts in our industry, as well as from other people that are in similar situations that are taking advantage of the free content and improving their credit and making their credit situation better. Hope to see you guys on the inside.
Hello and welcome back to the Credit Agent Show. My name is Michael, and on today's special episode, we're going to be discussing the differences between banks and credit unions. So stay tuned to figure out the differences. So I'm sure most of you know about the big banks like Chase, Bank of America, Wells Fargo, banks like that. Not so many of you, I'm sure, know about credit unions, which are great alternatives if you prefer better customer service and lower APR rates. That isn't, however, to discredit banks entirely. Banks, on the other hand, are really good if you want to stay up to date with tech, as well as many other reasons. So let's dive on into those reasons. So let's start off with the first differences when it comes to banks and credit unions being membership versus ownership. So with banks, they're generally going to be owned by investors and ran for profit. Now, this isn't to say it's a bad thing. A lot of the time, banks will work in effort to stay positive, so you don't have to worry about a degree of risk either when joining up with one. However, credit unions are going to work on a membership basis, and a lot of the times are nonprofit. The key thing to remember is when you are at a bank, you are a customer, and when you're at a credit union, you are a member. So when it comes to the type of products each one is going to offer, they are going to differ slightly. Banks offer a variety of services. You can get things like loans. They also offer personal investment, and you're going to be able to work with, a couple members personally with a lot of these departments themselves. When it comes to, credit unions, on the other hand, they're going to have a lot fewer, quote unquote products or services, but they're limited to things like, checking, savings, and credit options as well. Another downside to, things like credit unions versus banks is you're not going to have as many investment options when working with a credit union. They are not primarily there for that focus. If you're thinking about investing pretty heavily with your savings or your checking, you may want to look into a bank where you're able to kind of choose the degree of risk to go with when it comes to, stock market or day trading and things like that. So another key difference between banks and credit unions is the interest rates. And I know a lot of you are using that kind of as a determining factor, especially when you're looking at some more long-term loans, like mortgages that you're going to be locked into for a set period of time, generally, 15 to maybe even 30 years. And having even a minuscule APR rate for that amount of time is still going to be a lot of money you're paying that you could otherwise save. So the differences when it comes to interest rates between the two, banks are going to have a way larger interest rate. And the reason for this is because I mentioned previously, they are for profit. They are looking out for the investors and trying to keep them happy. So they are going to try to maximize the amount of money a lot of the time from you that they can get. Well within reason, of course. You're not going to expect these crazy APR rates all of the time. But when compared to credit unions, it certainly makes those interest rates look crazy, because credit unions, on the other hand, have very, very low interest rates. And actually, according to Investopedia, I'm going to quote here, in 2020, S&P Global Market showed that credit unions posted higher interest rates on CDs, money market accounts, and saving accounts, but the lowest rates on car and home loans. So that's a very important aspect as well, because credit unions have these rates and loans for things like, cars, mortgages, personal loans, things like that. So really any loan that you're thinking about, it's well worth looking into a credit union if you're concerned about that APR rate. Another big comparison is what comes down to fees. Now, most banks are going to have fees associated with them, even when it comes to trying to get your money from a different location. I'm sure most of you have tried to go to an ATM to withdraw money and noticed that you have to pay a certain fee because it's not the bank's ATM. This is a big drawback from banks and kind of links back to that prior statement I made before where they are for profit. Now, a lot of these banks won't charge you as much or at all if you go to one of their own ATMs or just bank itself to withdraw, but it's another kind of ease of access thing to consider, especially if you're going for a bank that doesn't necessarily have an in-person system available. Also, when it comes to the conditions required or the prerequisites to open an account at some of these banks, it's going to cost some money to you, and it's going to be a lot stricter when compared to things like credit unions. Now, just taking an example here, Chase has a minimum requirement of $300 down to even open an account with them. This can be a lot of money, especially if you're starting off and getting your first bank account. There are also going to be more requirements and stricter requirements for loans like mortgages and car loans as well. So that's another thing to kind of be looking out for. And there's going to be fees for, a lot of different types of errors, as well as bounce checks, overdrafts, things like that as well. So you have to be very, very cautious for what you're doing with your bank account. So the fees required for credit unions, on the other hand, are going to be a lot leaner when it comes to them. And actually, a lot of credit unions won't even require a minimum balance to open an account with them, which is great. And also, because a lot of banks kind of force this monthly charge on you occasionally, you won't have to deal with monthly charges. And depending on the type of union you apply for, things like a bounce check, an overdraft, things like that could be refunded entirely or just heavily discounted when compared to the bank's equivalent. So when it comes to online services and technology, banks will actually have credit unions beat because they're for profit and they're always trying to, raise that profit margin. They're generally going to put more money and invest more in things like online banking and the technology and security behind that. So yeah, banks are going to be a lot more secure, as well as the ease of access, especially accessing your bank account online in this day and age, is going to be a lot smoother and easier than it would be with a credit union. That isn't to say all credit unions don't offer online banking methods. Some of them might, but it just isn't as common and as, forward thinking as a lot of banks are. So if that is a big concern of yours, always ask before applying and double check. But one benefit of credit unions is that they will reimburse any ATMs you withdraw from or partner up to avoid charges, which is great because most banks don't even offer that. So kind of glossing over some of the differences we talked about, let's talk about those key differences. Larger banks just aren't well known for their customer service. And for instance, I'm going to read from here. In 2018, Wells Fargo was fined $575 million for opening unauthorized accounts and charging people unnecessary auto insurance and mortgage fees. Many banks rule, that fees are, kind of a necessary evil, if you will, to once again bolster that profit margin and appease the investors. So you want to make sure the bank is the right fit for you and really make sure you read a lot of those contracts when opening up an account with them. Credit unions, on the other hand, are great when it comes to customer service, and a lot of this boils down to you being treated as a member rather than a customer. And because you're a member, you're going to have a lot more to say in a much smaller environment that is a credit union. Customer service issues are often going to be voted on in a very democratic way by the owners and members of said credit union. And because credit unions are much smaller, they're going to work more on a local level where they're going to be able to work with a lot of local loan lenders, mortgage officers, things like that, and get you the best rates possible. Whereas a bank, when working on a national scale, is going to be a lot more difficult to get your complaints or requests through because let's face it, they have a line out the door for that already. So remember, if you're looking for the lowest APR rates possible, as well as customer service to the max, credit unions unions may be the route to go, whereas banks, on the other hand, would be a great option for yourself if you're more inclined for convenience. Maybe you're willing to sacrifice that give for, that customer service if you're able to handle a lot of your banking online, which I know a lot of people prefer it nowadays. Regardless of which one you choose, it's so important that you weigh the pros and cons of each to figure out which one is going to be the right one for you. And also make sure you read the fine print before signing. You want to make sure you don't get hit with any charges or locked into a contract you didn't necessarily want to sign in the first place. So as always, stick around for the next video and make sure you like, comment, and subscribe to stay up to date with what we, the credit agents, are up to. My name is Michael, and you have been watching The Credit Agent Show. Thank you guys so much for tuning in, and have a great day.